What is up, everybody? It's Stas here. Welcome back to another video. So the markets didn't do so well today. We saw the S&P 500 down 1.9%, the Dow Jones and the Nasdaq went down 2%, and the Russell 2000 didn't do so well either, down 1.5% on the day. And today we're going to be talking more about the markets, breaking down some technicals, going over 10 stocks to buy now. And I also want to share with you guys what I did in the stock market today, stocks I own right now. And we're also going to go over what's going on with Robinhood, any updates in terms of that, which there are some, guys. It's still looking pretty ugly. And as always, we're going to be going over my mentality right now in the market. So if you guys find value, hit the like button, subscribe, you know what to do. Go down below, do all that. Join the Strive Smart Discord chat, the Facebook group. Get 4 stocks from WeBull and $30 from M1 Finance. All of those are free. And again, they're linked right down below in the description box. So let's get into it. Right here, what you guys see on the 5-day 5-minute is the S&P 500. And not to say I told you so, guys, but yesterday we talked about how the markets could be pushing for a lower low, right? We could take out the lows. That's what I was saying in yesterday's video. And by lows, I mean the lows from 2 days ago at 37.30. And let me explain why I was thinking that yesterday, and we can see what ended up happening today, how it panned out today. And you can see yesterday we held 37.50 in the morning. We gapped up. We broke 37.70, right? That was actually a double bottom support from the previous day, so that was good. And the S&P 500 ended up filling the gap all the way to 38.30, which, take a look here. This is key. This is where we got rejected, and we actually shed about, not even 50 points from that peak at 38.30 to the point where we closed in the markets yesterday. And if we pull back a bit on this 20-day chart and we zoom into these couple of days here, you can see 38.30 was a big support, and it's actually acting as a big resistance now. And the fact that we ended up gapping back under 37.70 today after that big drop into the close tomorrow, that means downwards momentum continued, right? And I said yesterday, watch out for 37.70 today. And again, we broke under that. And the second we took the lows out from yesterday at about 37.30, that is where the S&P collapsed, and we took out those lows again, and we went all the way down to 36.90, and we closed on a nice upswing. But we're still in a downtrend here on the 5-day 5-minute. We're still making lower highs, lower lows, and we might continue making lower lows and lower highs. The downtrend is still intact. Who knows where it's going to stop? And like I said in yesterday's video, on this 4-hour chart, we must look at this as well, the uptrending channel. And what do you know? And I said this yesterday, if we break this uptrending channel, the support at 37.50, 37.30, it's likely that we go down towards that 180 SMA on this 4-hour chart. That is where I think the bottom could be in the short term, and we did exactly that. We did exactly that today, with the bottom being, no joke, right around 36.95, which is pretty close to that 180 SMA, and who knows, we could get even closer to that next week, again, if this downtrend continues. So overall, those are the key technicals I'm looking at right now for the S&P 500, and there's a lot of theories as to why the market is selling off. And one of these theories, and we gotta be very clear, this is a theory. Nobody knows what's going on. But one of the theories here is that a lot of these big institutions, they're actually selling off some of their large cap holdings, maybe some tech names, positions they've made a lot of money on, which is why we're seeing a broad sell-off. They're doing this so they can cover their shorts on a lot of these short squeeze stocks that we're seeing, a lot of these Wall Street bet stocks. This is one theory, so they could cover their shorts with this money that they're, taking from the large cap stocks, which they've made a lot of profits on, if that makes any sense. That is one theory. And talking more about Robinhood now, might as well just get this out of the way, and then we'll talk about 10 stocks and what I did today. In terms of Robinhood, they're still limiting the amount of shares and options you can trade. They are still limiting this, guys, and not just Robinhood. There's a lot of other brokerages that are still doing this as well. Users are now limited to positions of one GameStop share, literally one share. What's it at? 300? You can only buy one share of GameStop, and you can buy 5 GameStop options contracts, so you could only do 5 contracts if you're trading options, right? And that's down from the 5 shares and 10 option contracts from Friday morning. Okay, so I guess they decreased that as the day continued. And AMC Entertainment share limits were cut from 115 shares to 10 shares, guys, and the stock's like $13, so you could only own $130 worth. That's it. And their options fell from 100 contracts to 10 contracts, which, guys, this is just unbelievable. And they're doing this for a lot of other stocks. I was reading an article. There was like 30 stocks on the list. One of them was Workhorse. I mean, you could only buy 3 shares of Workhorse, 5 shares of SLV, because we're seeing a lot of talks around silver squeezing, so they're limiting that. Oh my God, guys, this is nuts. Nokia as well. Nokia shares fell from 110 shares you could own and buy to 20 shares, and option contracts dropped from 100 to 20. And again, there's a long list of stocks. They did this for Tootsie Rolls, another one. Bed Bath Beyond, I think it was BlackBerry as well. So many. You'll see the list online, but it is just crazy that they are doing this, and we talked about this deeper yesterday in 2 videos. Go check those out on the channel. They're doing this to save the big institutions as they're covering their shorts, and it's just a crazy world that we're living in. And as always, I'd love to know, what do you guys think down below in the comments? Let me know. And if you're enjoying the video, let's try and get this to 400 likes. I challenge you guys, hit that like button. I'll give you a second. Hit the like button. Okay, you hit the like button? Okay, cool. 400 likes, and also subscribe to that channel, this channel, down below. And let's get into what I did today. And I made some moves today. I'm not going to lie. I sold, or I didn't sell, or actually I cut losses in one position. We'll talk about that. But I ended up adding more to 2 positions here. So Square is my main swing trade right now. This is one that I got in at 206.50 that day that it crashed under 200. If you guys remember, that was a couple days ago. Take a look here. This is the day I got into Square, and I actually added some more today. You guys can see pre-market it was 227. It dropped all the way down to about 213 today, and I bought in as it gradually dropped down. Did I time the bottom at 213? No, I ended up getting in or adding more at 218.50, but the thing is, I added more. I averaged in. Now my position average cost is like 212 or something like that, and I'm still green on the position. And this is a stock that I think, truthfully, as long as we could break out of this wedge, which is a big technical spot coming up, I think if we could take 230 out, this stock is going to highs, all-time highs. And granted, I don't know, I don't want to just say that. I mean, anything could happen. The markets could crash, but let's say if the markets stay healthy, we gradually climb up with stimulus and so forth, I could easily see Square bouncing back, going to an all-time high. Let's just put it that way. So that's why I'm in it. I'm holding on. I added more to Tattooed Chef as well. This one's one that I'm down a little bit on right now. I originally got in at $24.50, added more. I pretty much doubled down at $23.85 earlier in the day. And now I'm looking to maybe add even more as long as we're holding above 23 and right around this 180 SMA on the 4-hour chart. That's a big spot. This gold SMA here, that's a big spot that I'm watching. And overall, I feel comfortable holding onto this and riding out the volatility because I think this is going to be over $30. I think that's where it's heading, over $30 per share. So I'm holding on and I'm adding, in these low 20 levels. I think these are good buying areas for Tattooed Chef. And BNGO, Bionano Genomics, is one that I was up, man. I was up. And I messed up by not locking in that quick profit, but I ended up getting in at 11:20 earlier in the day, and I called it out on, Discord. If you guys saw that, let me know in the comments if you guys made a move on BNGO, but I called it out at 11:20. I got in at 11:20, wrote it up to 11:60. I was thinking about locking in the profit, but I got a bit greedy. I was up like 3.5%. And then the market, it tore my face off. There's a saying. What's the saying? Bulls this, bears that, but pigs get slaughtered. You guys know that saying. I pretty much got slaughtered in this position, and I ended up cutting my losses as it dumped down pretty aggressively to about, where did I cut it at? 10.95 is where I cut it. So I lost about like 2.5%, and now, of course, it's up above $11. So that was meant to be a day trade. That's why I cut out of it. If I was looking to swing trade it, I might have just held on. But yeah, this is probably one that could be swing tradable, but I didn't want to hold it over the weekend, quite honestly. But if Monday, if Monday rolls around and it's looking pretty decent, $11, $11.50, if it doesn't gap down, if it looks decent on Monday, hey, I might pick up some shares to swing trade. We shall see. And I'm also still in SBE, nothing changed there. I'm in Switchback still. I am still in Workhorse, which did well today, up 4%, and they got restricted, like I said earlier, by Robinhood. I'm also still in Neo and SLV, which SLV, I've been telling you guys, this is one that I've been positioned in for, I don't even know how long. It's been weeks. I've been holding on to this at $23, and I think ultimately silver's going to squeeze higher, all-time high. I think SLV's going above, especially if we break 25.50, the resistance we're at right now. Let me extend this to the right. Take a look. If we break out of this, I think we're going $1 higher. I think we're going 26.50, 27, and even higher than that. So I'm holding on to all these stocks, guys. SLV is an ETF. Keep that in mind. It's an exchange-traded fund that just simply tracks the price of silver. So that's what I'm doing. That's what I'm holding. And I'd love to know what you guys are up to. Let me know down below in the comments. And now let's get into 10 stocks to maybe buy now. As always, do your own research. I'm not a financial advisor, but these are 10 stocks that have my attention. They have my attention. One of them is SRAC, which is also known as Stable Road Acquisition Corp., also known as Momentous, which, if you guys remember, I made a video on this back when it was only $10, back when there was not as much hype as there is now around this particular SPAC. And since then, the stock, or the SPAC rather, almost 3x up to $27, and now it's sitting comfortably at $20, about a 2x from from when I made that video. And this pull down was very much needed. It went to $27 too fast. It spiked up way too aggressively. Are these aggressive spikes? They sure are. and these are aggressive sell-offs as well, these couple of days of selling we've seen. And now we're right around a big level of support. I'd say 18, 19, 20 bucks is a big area for SRAC, right around this 180 SMA on the 4-hour chart. And I mean, we've seen what's happened each time in the past it's pulled down to this general area. It's hit a new support and it's rallied up to make new highs. And I think right around this point is a pretty solid buying opportunity. And this is my opinion, guys. As always, don't act on it. You must do your own research. And on this hourly chart, you can notice it's not out of the woods yet. We're in a clear downtrend. So I'd like to see a break probably into 21, 22 to catch that momentum. And those are some thoughts there on SRAC. Apple is another one which, if we're, buying this theory that hey, some of these institutions are selling large caps and, covering their short. Maybe that's happening. Who knows? If we're looking into that, we could maybe conclude that they're selling some Apple because Apple's done so well these past couple of months and it's dropped so much in the past couple of days. It's literally down 10%. That's a pretty big sell-off for Apple in 2-3 days. I mean, it's not crazy, but it's pretty big considering I don't know if it's the biggest company right now. I haven't checked the market caps in a while, but it's top 5 biggest company, top 3 for sure. And it going down 10%, that's having a drag on the market, obviously, like we're seeing. And this is right around a pretty decent dip buy, right around 130, 132, right around that 180 SMA 4-hour chart. And you guys can notice, generally speaking, 128 to 130, that has been resistance multiple times on this chart. And now we're trading above it, obviously making it a support. So I kind of like this. And if I were to add any fresh money or that I didn't already add today, it would have been in Apple. I didn't pull the trigger though, but this is probably one that I should have added, quite honestly, but I didn't. I'm still staying a bit cash heavy, and I'd like to get into this anywhere in the mid 130s. I think that could be where, we do see the momentum back up, high 130s, maybe back to the 140s. So watch out for the dip here on Apple. It is very attractive in my opinion. Same here with AMD. AMD's down 2% today. We clearly got rejected at about 95, 100. The stock failed at that point 4 or 5 different times. There's no denying that. And now we're approaching a point at about 85 bucks, which we're still, in a falling knife. The chart is not clearly hasn't found a bottom. Let's put it that way. Still looking like a falling knife. But based on the trend here, this could be a spot where we see a bit of a relief rally. Whether it's back to 89, 88 bucks, 90, 95 bucks. I think that's very possible. That gives AMD about 10% upside, and that's on a pretty decent earnings report as well. I think this is I don't want to call it a massive overreaction, but out of a lot of stocks out there, this dip is one of the most attractive. And I probably should have bought some as well today, but there's no need to rush it because I'm already in a decent amount of positions, but I'm keeping it at the top of my watch list. And J&J is another one, right? J&J, Johnson & Johnson, is down about $10 from its peak, down 6-7%. We're holding the uptrend. As you guys can see, we hit a low at about 160. We rallied up to 163. We're holding that 180 SMA 4-hour chart. And this is a beautiful continuation pattern. That's all I can say. And that's as simple as I can put it. This dip looks like it needs to be bought up. I mean, people have already bought it up today. You can see inverse head and shoulder on the intraday chart. This could end up breaking back up high 160s, low 170s easily based on this chart. And if I were to pick 3 stocks to swing trade other than what I already own, it's going to be the top three that we just talked about. SRAC is a bit more risky. Let's put it that way. There's a lot of upside, but it's a bit more risky. But Apple, AMD, J&J, let's say hypothetically I had, $3,000. I'd put $1,000 in each of those, and I'd feel pretty comfortable right now. That's hypothetically, and I'm not telling you guys, of course, to go do that. Again, I'm not a financial advisor, but I like them. Those are 3 picks, and SRAC make it 4. Those are the top 4 that I really like right now. And Bitcoin has seen a ridiculous spike in these past couple of days, and you can credit that to what is going on with the brokerages, the manipulation, the fact that it's so controlled. It's so just, you can pull so many strings. With Bitcoin, it's decentralized. So this craziness with Robinhood, everything going on, that made an even bigger bull case for Bitcoin. And we're seeing GBTC go up, the Bitcoin Trust. This went up 3% today. Yesterday, it was up even more. It cracked above $40. Or actually, no, that was today. It cracked above $40. And Bitcoin, I don't have my phone on me, crap. I don't know what it's at, but earlier when I was looking at it a couple hours ago, it was around 37,000. At this point, it could be a bit lower since we saw GBTC take a dump, but I don't think this dump is going to last. I think Bitcoin is going to recover over 40K. So these dips, in my opinion, on GBTC must be taken seriously. Same with Mara, although Mara is a bit more speculative, volatile. It's one that's worth watching. This is a cryptocurrency mining play. This went up 4% today, and earlier it was up to almost $25 and it closed at $20. So this dip that we're seeing intraday, hey, this could be an awesome dip buy. This has to be taken seriously. And now that I'm looking at this intraday chart, this looks like, and I don't want to just tell you 100% it's going to break out, but this looks like it's poised to break out. Look, inverse head and shoulder is forming. And what happens at the end of an inverse head and shoulder when the right shoulder starts to complete? Well, it breaks out. And if this inverse head and shoulder breaks out, it completes, that puts Mara anywhere from $22, $23, $24. That is a big, nice, juicy game. So I'm watching Mara. I'm watching GBTC. Riot is another one. IROT or IR. RIOT, Riot. This also has an inverse head and shoulder pattern beautifully forming here on the intraday chart. So this must be taken, you must take a look at it. Let's put it that way. So those are a couple of Bitcoin plays here in the market. And I have a gold play that I'm also interested in here, GDXJ. There's GDX, which is a gold miners ETF, and there's GDXJ, which is a bit more volatile, a bit more speculative, which is a junior gold miners ETF. So smaller miners, bit more speculative there. And what I'm liking here is it's down about $15 from its high. That is definitely over 20%. It's actually about 21%. So this isn't a bear market. That I like, because I like buying when a stock, an ETF, I like buying when there's a lot of momentum. That's one strategy. But another way I look at longer term picks is, okay, how much is it down from its peak, and what is the bull case for this particular holding? And for this, it's down 21%. That's a pretty good drop. And the fact that we're seeing all of this money printing, we're seeing, the devaluation of the dollar, that's a huge bull case for gold. And who gets gold out of the ground, right? It's the miners, gold miners, the junior miners. And again, GDXJ is a junior miner. And the play that I'm looking at here is, I could pick up any shares between 50, 55, but I think the big play is coming as and if we break out of this downwards channel here on the 4 hour. That's anywhere above 55, 56, 60, right? Excuse me, guys. Jeez. And I think if that happens, 65 plus could be coming. And this is actually a move that I don't think could happen in a month. It might take a little bit. It might take 6, 9, 12 months for something like this to pan out. But then again, it could take 3 months. We don't know. It could be very quick. I mean, last time GDXJ spiked aggressively, it went from 44 to 65. That's a 35% move. It did that in what? How long was that? About 2 months. So hey, anything could happen, and I'm interested in that. And it obviously correlates to the price of gold a lot as well, so we have to keep an eye on that. And again, like I said earlier, I'm still in SLV, which is a silver play. And 3 more to look at here. Open is Open Door. This one is interesting. We're in this wedge on the 4-hour. We can see we're holding higher lows, we're making higher lows, but at the same time, we're making lower highs. And an interesting thing here is, take a look. We're in the middle of this wedge, and we're actually at a resistance, a big resistance in the middle of this wedge, right around 27 bucks. That was a resistance back in the beginning, towards the middle of October, back in the beginning of December. It was also a support back earlier this month in January, and we broke under it, making it a resistance. So I think it is imperative for Open Door to hit 27 and break that before I get in. You could do whatever, but for me, I want 27 to break, and if that could happen, we get 27.50, 28 bucks. I can see it fill up to 30, and 30 is the big test. If we take the wedge out, we're going 35 plus. I'm calling it. I'm calling it right now. And I don't like giving huge price predictions, and I understand from 26 to 35, that's a pretty big price prediction. I know you're seeing even crazier ones on YouTube, NEO to $5,000. I guess it's not that crazy, but still, 25 to 35 is crazy, but I think it could happen, especially if we break this wedge. So I'm watching Open Door. I'm watching SunRun, RUN. That's another one that's dipped pretty nicely from a pretty overbought spot. It went from 70 bucks to 100 bucks in a very quick span, and now it's down from $100 to $70. It's down 30%, well in a bear market. And based on what I'm seeing here, guys, it looks like it could be holding the uptrend as of now at a higher low, right around $68 to $70. And if so, if it's doing that, I would like to see a gap fill to about 75.80. That's where I see SunRun going. That could give it about, let's say, probably like 10-15%. Yeah, about 10-15% there. So watch out for SunRun. As long as it holds 70, I think this could be a play. And the last one is IPOE. Do not forget about IPOE, guys. This one today, you arguably missed the move. I missed the move as well, but there could be more upside because today it went up 23%. And who's to say the momentum can't continue? I think it could. And if we see a break out of, I'd say, gosh, it's up even more after hours. So this is, I don't know, this might not be worth chasing. But if we take out, let's say, 26, 27, I mean, could we go higher? Yeah, maybe 28, 30. But overall, I'd like to see a dip, maybe to about 20, 22. That could be a spot here for IPOE. And as always, I'd love to know your thoughts. And I'm going to wrap up the video here. Let me know your thoughts down below in the comments. Like the video. Like I said, I challenge you guys, 400 likes. Hit that like button. Subscribe to the family. Subscribe to the channel. Join the family. And don't forget to also, and there goes Siri talking again. That's so funny, guys. But yeah, join the Strive Smart Discord chat. It is linked down below. Join the Facebook group, and you could also get 4 stocks from WeBull. Those are valued up to $1,600. And guys, listen, once you do that, you have to sign up. You get 2 stocks when you sign up, and you get the other 2 once you deposit 100. So you have to deposit 100 to get all 4 of the stocks. That's from WeBull. And M1 Finance, you could get 30 bucks simply by signing up and depositing any amount. And all of those are linked right down below. And again, they are free. So I'll catch you all in the next video. Thanks for watching. As always, guys, stay safe out there. Keep crushing the markets. Peace out.